to break that, right? So, you guys can see it. And we can go from there.
Okay.
You guys able to see it?
Yeah.
All right. So today, we talked about last night that, we really want the bulls to stay above the 94.25. Does everybody know where that came from?
That was the 6-day balance.
Yeah, that was just our 6-day balance. Our basically first standard deviation was there, right? So that was here, and that's the level that we wanted to be above, right? And you see here that was a 1 point resistance, right? And it's the value area low of the, I would say, sig1 of multiple days. So that came here, and then you see them, in 1 hour they dipped below, and they have a little bit of hammer. We did have a spike yesterday. I'm sorry, today. So I'll zoom in here in a second. Let me give you guys this breakout. So when you think about the open, we opened right here at 16.5. And then we talked about, we really need them to go higher. If they want to go higher, they have to break 19 quickly. In the meantime, we talked about this POC here. I don't know who was trading live. I mentioned that POC is probably going to be tapped at 1 point, right? They came back right to it, right? They tapped this POC. They tapped this POC right to the penny, and then they bounced, and then you see the F period made higher highs. So whenever this happens, right, that means that they're no longer agreeing on this value, right? So let me see. So let's see this little guy right here. You guys see this? So between A period and E period, and each period means 30 minutes, right? So they agreed on this value, which would be the upper quadrant of this Q here, meaning they're above the POC and testing the value area high. Does that make sense?
Yeah.
Okay. So then when they went above, and then I said, if we lose 19, we want to take a short there. I don't know who was on live, but we took the short here. And ever since then, you see that every 30-minute period here was framing down. The G period started it, framing down. H compressed, not a lot of price action, boring time of the day. Lower high, lower low, lower high, lower low. And then the K period put in equal highs, but lower low. And then they had a tail here until the M period, which we're trading live. They went below here, and I think we took it somewhere long, about right here. And we were targeting about 10 points, and we got the 10 points. And then we closed it. So for tomorrow, now that you're basically trading inside this bracket, you really don't have much changed from the levels. The bulls, they still want to stay above this, and we talked about the single prints from Friday, or excess low, if you want to say it right here. They basically came back here and bounced from there. So if we want to see bears take control, if you think about the penthouse and levels, this is the penthouse, right? I mean, this is the top level here. They tried once and they failed, and now they went below it. If they reject this green bar value, high chance that we're going back to the bottom here, right? And they'll be somewhere in here, and you can use POC here like this to find where is it heading. So if they can't agree on this price and distribution on the top, and you can extend this even here so you can see the distribution. If they can't agree on this, guys, tomorrow, the high chance that they're going to go to 6.3, 6.9, very, very high odds, and then ultimately that they're going to go back to the skinny belly here at 51 is on the plate. Does that make sense?
Yes.
Yes.
Okay, so it should be pretty straightforward. And then for the new people, whenever you have, I'm just going to hide this for a second. Whenever you have a spike, does everybody know how to mark a spike?
No.
Okay. So when you think about, we're going to cover this Sunday, but here's a kind of first session, right? If you look here, each period or each letter here represents how many minutes?
30.
So it's 30 minutes per letter, and then when you look at these, right, periods, it just tells you at what level did the price and how much time that is spent there. So market profile is more about time, rather than volume, right? How much time was spent at what level? And then if you look here, right, they auctioned kind of back and forth here in A period, so on. And then the last period, which is 3:30 to 4, is our M period. Each period validates the next period. Does that make sense? So like A period is validated by B, C validated by D, and so on. But since M is our last period, which is 3:30 to 4, the only other period that comes in on trading view after is the N period, which is our settle period. And in this case, the price was settled at 96 3/4. So M period, if it does make new lower lows compared to other lowest periods, the spike base, if it's bearish, you would find the lowest period for the day besides the M period. What's that period? What's the lowest level period that you have besides M? Besides M.
N.
Don't look at M and N. Don't look at M and N. N period is 4 to 4:15. That's already market closed. Cash session's off.
Okay.
Okay.
So the only other one is K, right? So what you do is you will find the K period here at the bottom of it and just draw a line. And let's say we'll change this to color. Well, this the way I typically do. So I will find the bottom of the K period, which is here. And you will mark that here called spike base, because that's where the spike and the value shift happen, which is at 96. And the spike end is basically your previous day low, which would be an RTH session, the same as here, which is 6387. And this will be your spike end. And there's a few rules about spikes, and it's fairly simple to play. People that are patient, you can make a lot of money just playing spikes and the setups on it, because it does have a pretty good chance that it's going to work. So tomorrow, if we open, so this is a bearish spike base, correct? Let's make sure. Because the price went lower than the rest of the periods, correct?
Yes.
Okay. So if that's the case, if we open somewhere, let's say we open here, what does that tell you?
Almost because we're above the base.
We open below the base.
Okay, and how would we treat that? If we open above the bearish spike base, how would we treat it? Is this bullish or bearish here?
Bullish because we're above.
Because we are rejecting the spike to the bottom. Then, in the other words, if we close above it tomorrow, this M period becomes what? In future? Comes a buying tail, yeah, it becomes access. You treat it as access and you carry it forward, right? So if you open, let's just say you open above this spike. If you open anywhere between, I'm just going to copy and paste this. If you Does that make sense here? So if you open below between bearish spike base and spike end, that's considered bearish, right? And that's most likely a retest to the bearish spike base. It's probably a good short. And then if we open below here, let's say we open below the spike end, how you guys treat that?
Bearish.
That makes sense. So here it's extreme bearishness, right? And we can probably wrap this so you guys can see it. So below here, that's extreme bearish. I'll call this bearish. And then above here, you're rejecting the prices lower. So depending on how we open tomorrow, that's how we want to play this. If we open, this is something you guys have to keep in mind, because reading market profile, is that about present data or past data? Like when you're trading, when you're reading RSI, that's a lagging indicator. It's computed based on historical data, just like moving averages. Market profile is is live, right? It's telling you data as present. So if tomorrow, let's say we see that we are above this level, we open here and they auction and they come back here, don't short that. There's a high chance that they're going to basically reverse this and go back to here. If something like this happens, open below, get in. If you take a short here and it doesn't work, you'll know really, really fast that it didn't work. So don't get mad that you took a setup and it doesn't work. It's just part of the game. You take the setups that you see. If this setup here, let's say considering we're in a bracket, is this the best short here on the bear spike? Considering you're in this range on the top, is this the best way to short it here?
No.
No, it's not the best setup for a short. Be very careful shorting that with size, and be really accepting of what you can lose on that short if you do have or take it, right? You're in the bottom of that 6-day or 7-day bracket now, or multi-day, whatever you want to call it. Give you the candles. I'm talking about this, right? So if you're in here, now we're just trying to see if you're accepted, and if this spike base, we open below it and we accept it, I promise you by the end of the day we're going to be at 33. Very high chance we're going to be here. So don't be married to a position. Oh, I'm short. You're reading the market to tell you the idea. If something changed, if the auction flipped, we took a short today about below 19 all the way to 94. Then we took a long towards the end of the day, right? Just kind of playing around with the market. But other than that, the market didn't give you a whole lot, right? If you guys think about it, this is, what they were trading today. This is not the best price action to trade. This is the only one that we kind of took and that worked out and, went all the way down. But otherwise, it was a really shit price action totally. As a total day here, it wasn't that impressive. Let me just check the volume, and you see here again on volume. This was
Hey, Shorty,
clear
quick question.
Yep.
I thought Spike was supposed to be on L period.
Spike base supposed to be an L period.
Is it not?
That's if there's gonna be a spike in the M period.
That's to tell you if the L period makes lower low, there's a 6% chance that we're gonna have the M period make a new low. Meaning the M period, it's helping you calculate what are the odds that you're gonna get a spike.
Gotcha.
When the L period makes a lower low, meaning they clear, let's say the K was here, there was 66% chance the M period is gonna crack and put in a new low.
Oh, so it's more of like a confirmation.
This is just a heads up.
Trading hours.
Yeah, you get a heads up a little bit sooner. I typically know about 3 o'clock, 3:15 if we're gonna get a spike or not. I use the L period to make that assessment, and if you go back, I would say on some time, right, and take a look. We calculated last time. I think it was free that calculated it, and I also did it. And like you, take a look at this day here, and you see the L period made the higher high, right? The highest period at that point was, what was it? I.
Mm-hmm.
And then the L period made higher high, and this was L period, and then followed by a spike with the M period. So when the L period makes a higher high, it's usually followed by M period making spike as well.
So spike base is basically like the period that is before the M, right?
L period. The spike base is driven by M as in Mary.
Okay.
You see here, this is the M period made lower low, and the previous lowest period was K.
Okay.
And in this case, the market was not telling us that there was 66% chance, there was 34% chance that we were going to put in a lower low with M period, and they did.
Okay.
Yeah.
Cool, thank you. I thought it was always just
No.
this was always supposed to be on L period.
No, we use the L period to gauge and calculate what are the odds that we're going to get some action in M period.
So spike base could basically be like any period, right? As long as
Correct.
the M period
Yeah.
exceeds it.
That's correct, right? So if you had D period going all the way to like, let's say here, and then period cracks it at 92 to 87, then you have a 5-point spike. In this
Okay.
case, you have about 11 points, which is not bad. 11 points, a decent spike. So tomorrow we'll find out. Let's see where we are after hours. So far they're rejecting the spike, right? And you see that they rejected that 406 again. That was actually a good short. But they're going to go lower here tonight. They're going to clean up these lows here tonight, just FYI. Whoever's trading. Meaning they're going to go below. They're probably going to hit 90 tonight and then bounce from there. Probably not a bad long and go all the way to somewhere 10 points, 11 points. And tomorrow you guys have CPI, I believe. So let's take a look.
Yeah, tomorrow CPI.
Yeah, tomorrow CPI. So please be careful trading in the morning. While I know some of you guys are still on that, I'm just gonna take one trade. That's a habit that you eventually create, and you don't know you're creating it. You know, as you guys know, I do not trade like the binary events at all, unless I throw in $100 in options or something. I'll trade it that way, but it's not worth trading in the morning. It's better off walk away. Sure, you could have made thousands of dollars, $100,000, but you can also lose that money, right? And for some of you that play with funded accounts, it's just a bad habit that you're creating, right? So I would say teach yourself discipline, and you really don't have to trade the binary events. You know, people say I can read the footprints, I can read. You can't read shit. When it's binary, it's already predetermined, and there's only a handful of people that are aware of it. So, and it's the same for earnings. Earnings are actually pre-recorded a week before everything is known by CEOs, CFOs. They already know that, and if there's any C-level people here, they know that for a fact. So, don't gamble too much on these binary events. I would suggest you guys practice discipline and not trade them.
Yep, it's true.
Yep. I mean, I've sat in a room with some of these C-level people, and they would tell me, "Oh, tomorrow our stock's going to be 12% up," and we were like, "Oh shit, it's up 12%." How did you know? So, yeah, all of this is every earnings that you guys see is already been pre-recorded by C-level a week before. And I'm sure Sonny's aware of it as well. So that's how it works, at least for the earnings. But even for these big boy news, right? The market news, I'm sure people know about it.
Yeah, it makes sense.
All right. Well, we'll see you guys in the afternoon session. I'm not going to trade the morning probably unless I see something juicy. I'll jump on, but this still remains the spike level. I'll be very cautious of a short, right? Especially if they open below, news come in, and then you see them do this. Do not be short here. Let them come in, and then you can drive this long. If we come back here and a really big sell-off comes in, and then they come in and you see them struggling, meaning it's not a V shape at an angle, but they're like dragging this, coming to a spike here, then it might be a decent short to take, but it just depends how it plays out based on the binary event. I would size down. If it's going to be a good binary event, it should have volatility and it should have a lot of points. So don't size up if you're going to be playing and be stubborn about it. Otherwise, size down and let the market volatility give you the points and the money, right? Invest less, make more. Okay. And Sunday for 11:30 a.m. we are confirmed for the class. So we're going to do market profile, volume profile class, and we're going to do a stock scan. So for the newer folks in the Discord, right, I do monthly. I didn't do it this past month because I was out of states. But I do monthly and kind of ad hoc stock search where I show you guys what I'm looking for based on the clouds that I use. And some of you guys have gotten the clouds recently through the lifetime offering. So we'll kind of reassess, you know, the knowledge on the clouds, what we're looking for long term. Not every stock that's, you know, on the bottom of the clouds I buy, right? There's sometimes a lot of garbage, but then there's a lot of golden nuggets too. that you can buy and kind of sit on it. And typically they play out pretty well, right? And there's a lot of people in Discord that, you know, do the research using clouds and search and what I'm showing, and they do their own purchases, and they've done a pretty decent job on a long-term portfolio. And I would say, you know, a lot of people base it on the amount of money they have. You don't need to have a lot of money to start investing. And it's the best thing you'll ever do, especially if it's for you, if you're starting young, to learn. And then you can also, if you're a little bit older and have kids and you haven't started this for your kids, it's really a game changer for people that do have kids. You know, maybe your parents didn't have the opportunity to teach you how to do it, but once you learn this and you can pass it on to the kids, it really helps them build a net worth and kind of build wealth that you're leaving them behind with. Just think about it. If you go to a Chase Bank right now with $250,000, they're going to give you 4%. I am pretty sure with a little bit of knowledge that you can find a stock that moves more than 4% per year. So then you got to ask yourselves, like, if they're giving me 4%, how much are they making on my $250,000? Right? So
Definitely true.
yeah. So you don't have to force yourself, but you know, investing is a pretty good freedom path, right? I would say, especially long-term investing, even if it's a few $100 a month or every 3 months. Believe it or not, it adds up over time. And then once you start getting some dividend checks, it helps tremendously, right? Especially if you own Pfizer and a few other companies that pay insane dividends. All right. Well, thank you guys and have a good night. Hopefully this made sense and why we took the trades we did today. We'll see you guys tomorrow.
Thanks, Shorty. Good
Thank you,
night.
Shorty.
Bye.
Thanks.